Good afternoon, everybody. It's Jeff Jenkins here. Just make this minor correction. I'm going to start by myself. Eric may join me. He unfortunately had to do a thing with the judge in virtual court this afternoon. So today we're continuing our Facebook Live series. We do it at 2 p.m. every Thursday afternoon. And this afternoon, we're going to talk about a couple of different things. We'll see how much we have time for. First of all, we want to talk about life after bankruptcy. And basically, we want to talk about credit reports and also getting loans when a bankruptcy is concluded. Then we're going to talk about how bankruptcy interacts with estates and probate matters. So, what if you file a bankruptcy and somebody leaves you money in a will? What if they leave you a home? What if there's a reverse mortgage on the home? What about life insurance? What about debts they might have? And so forth. So we're going to talk about all those things, hopefully, this afternoon. First of all, as far as life after bankruptcy goes, as you're aware, because we've talked about this before, when you do a bankruptcy, your object, one of the main objects, is really to get a discharge of your debts. And that would be your unsecured debts, so credit cards, medical bills, things like that. You want to get those erased. If you do a Chapter 13, probably another goal that you have is to deal with some kind of secured loan that you're behind with, and you want to keep whatever property it is, your house. If you're behind your mortgage, if you're renting a place, you want to hold on to that. A car, if you're behind with a car loan, and so forth. But generally, getting that discharge is the goal, and that kind of marks the end of either kind of bankruptcy that a person would do, either a 7 or 13. A lot of people, I can't tell you how many clients I've had over the last 35 years come in and say, Jeff, isn't this going to hurt my credit report if I do this bankruptcy? And I think to myself, I usually don't say it, but I think to myself, oh, sometimes I will tell them. I'll tell them, your credit report is ruined already, or you wouldn't be sitting here. Your mortgage company's foreclosing on you. You've got $50,000 in credit card debt that you probably haven't paid anything on in months and months and months and months. So your credit report's not in good shape right now. Certainly filing the bankruptcy, you're not going to get a gold star for that in your credit report. But it's going to be a step on the path to get your credit report squared away in the long run. The credit reporting agencies use different things to create a credit report score. How much money you owe is certainly one of them. So by eliminating a significant amount of debt through a bankruptcy proceeding, you are taking a step in the right direction in terms of having a higher credit score. At our law firm, after your bankruptcy, after you've got your discharge, as a gift to you, you don't get charged for this. We refer you to a person that we do business with who specializes in repairing people's credit reports. And he'll send you things over a period of like 10 to 12 months. And if you do all the things that he suggests doing, he's going to try to get your credit score to 720. And generally, he's successful. So, that's a great thing to do. We encourage our clients to do that. It's free, doesn't cost you a dime. I'm paying him every month for that service. So that's what happens with us in bankruptcies and helping people with their credit reports. As far as getting loans, a lot of people might think that, how am I ever going to get a loan again? I want to buy a house or something. And bankruptcy is not going to keep you from getting a loan forever. It's going to go in your credit report, that's for sure. But a little while after the bankruptcy, like let's say a year. A year is a good benchmark. A year after you get a discharge, you're going to be in very good shape for getting loans at normal interest rates if you fixed your credit report. And if you follow that program that I just talked to you about, you would have fixed your credit report by that time. You'll be able to get market rate loans on mortgages. Certainly with a FHA or a VA loan, they're more lenient than other types of lenders in terms of bankruptcy and offering market rate loans. A car, you'd be able to get a car at a normal interest rate, again, if you fix your credit report and you wait for a year after the bankruptcy is over. The bankruptcy itself doesn't prevent you from getting things. We have clients who purchase cars all the time with a bankruptcy going on. Unfortunately, their interest rates are usually pretty high. I've had clients purchase houses with the Chapter 13 going on. So these things aren't impossible, and you shouldn't think that they are. And certainly, if you need to file a bankruptcy, don't hesitate. You talk to an attorney, talk to us. We're happy to talk to you for free and go over your situation with you. But I can certainly answer your questions about credit reports and getting loans after the bankruptcy is started and then again after it's finished. So that's about it on credit life, let's call it, after a bankruptcy. The other thing we want to talk about is a little more involved, and that is how does bankruptcy interact with estate and probate law? So first of all, if you have a relative that passes away and you're somehow, you have something to do with the estate, maybe you were appointed as an executor or an executrix, or maybe there is no will, but you get appointed as the administrator by the probate court because your friends don't want to do that. See, Eric's finished his virtual court appearance with the judge.
Yes. It went very well, Jeff. The judge, being it was by phone, the judge liked my tie.
Did he?
And yes, he did. Very nice. Haven't worn a tie in several months.
No.
Here we go.
So where we were I was just starting bankruptcy and estates and probate stuff, and talking about if someone, a relative of yours, passes away, and there's a will or there's not a will, what about their debts? What happens with their debts? I didn't quite answer that question yet.
It's always easy to ask the questions, isn't it?
Yeah. So what do you think?
Well, if someone passes away, it's kind of like an accounting question. You start with your assets, and then you subtract the liabilities. And
Right.
after the liabilities are satisfied, then there can be a distribution to those who are the beneficiaries in the estate.
And
Of course, there are certain assets that pass outside of that.
And that would all be from the decedent's estate. So just because you did a bankruptcy and you had a relative pass away, there's no way that you get drawn into their debt situation. Their estate has to satisfy the debts if they exist, if there's any money to do it, after certain things are paid for, after the estate is administered to a degree, and you pay burial costs and things like that. And Eric was starting to talk about things that in a normal situation would pass outside the estate, meaning they're just not part of it. They happen, but it's not affected by creditors. Creditors have nothing to do with it. It just passes outside the estate. So some of those would be, Eric?
For instance, sometimes life insurance, you can name someone as a beneficiary.
Absolutely.
And remember what I just said, it's typically accounting. It's assets minus liabilities, and the rest goes to beneficiaries if someone passes away. Life insurance is different. If it names a beneficiary specifically, goes right to the benefit. Let me draw it this way. It goes right to the beneficiary. See that? It goes right to Eric Clayman, if you name me. It goes right to the beneficiary, and bills don't have to be paid from it.
No.
And that's different than, for instance, a bank account or a car that you choose to sell.
Exactly.
But Jeff, you made a very good point. I've had over the years many people who say, my father died, he has $200,000-$300,000 worth of credit card debt, and he had a car. What am I going to do? Will I be responsible for the $200,000? And the answer, of course, is no.
No, not if you're a named beneficiary or somebody who would inherit according to New Jersey's intestate laws. Those aren't your debts. Those are the debts of the person who died, and their estate, whatever things belong to them, would be their estate after they pass away. Their estate could satisfy the debts if it's able to, like Eric was talking about. If things are dealt with and there's money left over, then creditors can make claims. They have a certain amount of time to make claims on the estate. But certainly just because you are inheriting money or something like that, that doesn't make you liable on the various debts the person has. Yeah, absolutely. Eric, we had an interesting, this is an ongoing thing. It happens all the time. But it was one of those interesting things that you and I talked about. And that is, what happens if you have a husband and wife, let's say, file a joint bankruptcy? And it's a Chapter 13. Let's just say, it could be a Chapter 7, I suppose, but it's a Chapter 13. And you go along, and they go to their meeting with a trustee, and they're making trustee payments. And unfortunately, one of the husband or the wife passes away. They die. Can their estate continue their part of the bankruptcy? Clearly, an estate can't file a bankruptcy. If somebody's died, it's too late for them to file a bankruptcy. Their estate, their belongings after they die, can't start a bankruptcy, but it can continue one, do you think?
Well, certainly under Chapter 7 and the bankruptcy rules, the continued, quote, liquidation of the Chapter 7 assets continue. Now, as we've talked about in many episodes, Chapter 7 is the quicker bankruptcy. You're in and out of bankruptcy in 3 to 4 or 5 months, 6 months, and you get a discharge. And we typically only file Chapter 7s for clients where all of their assets are exempt or protected from creditors. So you do a Chapter 7, you get a discharge of all your debts, and you don't owe anyone any money. Sometimes there are cases where people have a personal injury case pending or something that a Chapter 7 trustee would have to liquidate for the benefit of creditors. Rarely do we get involved with that, but it does happen. Under either of those situations, the no asset Chapter 7 or the asset Chapter 7, if the person passes away, the case continues administration, is my understanding. However, in a Chapter 13, there's no absolute rule. And it's up to the debtor's family or the decedent's estate representative to make a decision about whether they want to continue in Chapter 13. And then if so, the court and the trustee weigh in, and it's a balancing test. Will it benefit? Who will it benefit to continue in bankruptcy? Right. And it can get very complicated because, again, suppose the person had life insurance. Suppose the person had insurance through work. It may not pay to continue in bankruptcy if it's one of those insurance policies that go outside the estate. You may not want it to then be included in a bankruptcy estate. It can be very complicated.
Yeah, absolutely. And like Eric was intimating, there's a split of authority among the bankruptcy courts about what should happen. And I'm sure it has to do what they would decide has to do with what kind of bankruptcy it is, what point it's at. Certainly. But most of the time, for the last 35 years, I don't think we've had one time where a trustee fought us if somebody died and we wanted to continue the bankruptcy for the decedent's estate.
You're exactly right, Jeff. And at the end of a bankruptcy case, before someone files bankruptcy, they have to do a debtor education class. And at the end, before they have to do a certification that says they've completed a course. At the end, it's the debtor education course. Well, how can you complete the debtor education course if you're no longer alive? And we have filed motions on behalf of people who passed away to have that requirement waived. And the judges have summarily signed those orders. Number one, the debtor can get his discharge even though he's dead. And number two, because he's dead, he doesn't have to do the second class of debtor education.
What purpose does that class serve
If the
person's dead?
So we've had judges sign off on that. And now we're having judges and trustees question whether they can remain in Chapter 13 once they're, especially if it's a spouse, whether the other one can keep the case going for both of them. There's all sorts of policy reasons why they should be able to in the Chapter 13 instance. And Jeff, I'll give you an example. I think it'll give you a good opportunity to explain this to people. Suppose someone owes old income taxes and they filed joint tax returns, say 2014, 2015, husband and wife, madly in love, but they owe the IRS some money. They filed bankruptcy in 2020 and they have a Chapter 13 plan. What happens if the debtor passes away and they don't let the case continue to be administered in both names?
Well, the problem that you have there, of course, is you're talking about taxes that are older that might be of an age where they'd be dischargeable, even though they're income taxes. And we see this a lot in bankruptcy context, not only with the situation where someone dies, but also the situation where you've got the husband and wife sitting in front of you, and the husband says, I want to do it. And the wife says, I don't want to file a bankruptcy. And they have taxes that they owe jointly. And the problem is whoever follows through with a bankruptcy, they're going to get rid of all their liabilities. In fact, like I'm saying, and you were talking about, some of those debt taxes may just be dischargeable and go away. But if the person doesn't file the bankruptcy, either they don't want to or they're dead, they are going to continue owing those taxes. And even if you had a situation where taxes had to be paid through the bankruptcy,
this is a good point,
and the one spouse pays them, that doesn't get rid of for the other spouse, it doesn't get rid of any ongoing interest or penalties. So at the end of the bankruptcy proceeding, the IRS could say, well, Mr. Smith, congratulations, you're finished with your bankruptcy, and your tax liability has gone away. Unfortunately, for your wife, she didn't do the bankruptcy, so she owes us now so much in penalties and so much in interest that needs to be paid.
And if Mrs. Smith has passed away, then really, right in that situation, she would only owe interest and penalties. If Mr. Smith has a discharge of his debts, Mr. Smith one day wants to sell his home, and quite possibly, by not allowing Mrs. Smith to obtain her discharge, this IRS debt will circle around and have to be paid.
That's quite possible. If the IRS had a lien against these people when the bankruptcy was filed, an IRS lien is pervasive. It covers everything that you own, all real estate, all everything. You have homes like our president does, 3 different homes. I don't know exactly where he's got them, but he does. I guess he's
What's a big white one, isn't it?
Well, I guess that's his 4th home.
Okay.
But he doesn't have to pay for that, though.
No.
But he's done well in politics. And so he's got 3 homes, let's say, in 3 different states. If he were to file a bankruptcy with an IRS lien, well, forget about the bankruptcy, but the IRS lien would attach to each one of those homes. You have 10 homes, 20 homes, 2 homes. It attaches to everything: cars, furniture, all personal property, bank accounts. And, we deal with this with the IRS all the time and valuing assets to see what might have to be repaid to the IRS if they do have a lien or a secured creditor. So, this gets a little bit complicated. I hope we didn't lose you today. The bottom line is we know how to deal with this stuff. I mean, we understand exactly what needs to be done and can answer all our clients' questions if some instance like that was to arise. And so for our clients, they just have to know, I'm going to go see Jeff and Eric, and I'm going to ask them the questions, and they're going to fix things for me. And that's what's going to happen.
That's our goal. And we've had many, many, many happy clients over the last 35 years.
Yes, we do. Yeah.
And that's why we're still in business.
Yeah.
We wouldn't still be in business if we didn't have happy clients. So it is a complicated area, and it's a difficult area because we need to understand the facts in a rational, straightforward basis, talking to people who've just lost a spouse or a loved one.
Right.
So it's a very, very difficult time, and we understand that. But with death comes less income typically.
Yeah. There's all kinds of problems,
Yeah.
especially if a couple's been married for a long time. I don't want to go on and on about things like this, but it's just there are a lot of things to deal with, and we can certainly help. People are married for 50 years. The husband's been paying the bills for 50 years. The wife comes in to see us and said, my husband died of a heart attack last week. I have no earthly idea what to do. I don't know if we have a checking account. I don't know what bills have been paid. I don't know anything. Or it could be the other way around. It could be the wife was paying the bills, and the husband comes in and sees us, and he's distraught. But that's something that happens a lot of times.
Yeah. Hopefully you can refer this video or any of our other videos on the Jenkins and Clayman brand new and improved website.
Yes, it's brand new.
And there is on the top right there, you can go to click right about there. You would click the videos, and then you can get all of our Facebook videos from the past 13 months at this point, I think.
Right. Yeah.
And this one should be referred to anyone who you know is going through the tragedy of a spouse who's passed away or a loved one who they live with who's passed away, and it's causing financial issues. We're here to help.
Yeah. We didn't really talk about reverse mortgages today, but we're kind of about our timeline.
Yeah.
And we've talked about reverse mortgages before pretty thoroughly. I don't know that we need to go through it now or next week. So why don't we wrap things up for today? And next week, we may be taking a vacation because I won't be here.
Well, one of us will be taking a vacation.
Well, right. So we may have to skip next Thursday afternoon, but we'll certainly be back following Thursday afternoon, and we'll probably pick up with bankruptcy and how it interacts with other areas of the law, like family law. How does that work? But those things all do get complicated, but it's worthwhile, I think, just to discuss a little bit to give you some general idea of what goes on.
I agree, Jeff. It really does, and we appreciate you tuning in. And just give us a call. We're here all day today, and Monday to Friday, give us a call. We can help you out.
Absolutely. So until next week or the following week, goodbye. Stay safe and God.